Good morning, traders. Welcome to Expert Trader UK's Daily Market Pulse for October 27th, 2025. Global financial markets are commencing the week with a significant surge in risk appetite, powered by two key catalysts: a breakthrough in US-China trade negotiations and a dovish monetary policy trajectory following Friday's US inflation report. This confluence of positive news has triggered a powerful cross-asset rally, lifting geopolitical uncertainty and positioning equities for sustained momentum. Asian markets were the immediate and primary beneficiaries of the trade détente. Japan's Nikkei 225 surged over 2% to breach the 50,000 mark for the first time in its history. This monumental move was primarily driven by continued momentum in heavyweight chip shares and stocks related to artificial intelligence. Elsewhere, South Korea's Kospi jumped 1.83% after hitting a record high on Friday, and the Shanghai Composite Index rose 0.89% to 3,985 points. Hong Kong's Hang Seng Index futures also pointed toward a stronger opening. The MSCI Index for global stocks climbed to an all-time high. Futures for the S&P 500 and the Nasdaq 100 are advancing in the pre-market session, building on record highs achieved last week. The fundamental conviction underpinning the week's risk-on move is the expectation of sustained, measured monetary easing by the Federal Reserve, a stance solidified by Friday's inflation data. Despite the ongoing U.S. government shutdown, the delayed September 2025 Consumer Price Index data was released on Friday, October 24th. The release was necessary to calculate cost of living adjustments for Social Security recipients. The headline CPI came in at 3.0% year-over-year, falling below the median forecast of 3.1%. The Consumer Price Index for all urban consumers increased 0.3% month-over-month, a slowdown from the 0.4% rise in August. Crucially, core inflation also came in at 3.0% annualized, a drop from 3.1% in August and below expectations. This softer CPI print was immediately deemed bond market friendly and cemented investor expectations that the Federal Reserve remains on track to deliver a rate cut this month. Analysts note that it would have required a surprising surge in inflation to deter the Fed from easing, which did not occur. Consequently, markets are pricing in the high probability of a 25 basis point rate cut at the upcoming meeting. The primary driver of risk sentiment is the significant step back from an all-out trade war. Trade negotiators from China and the U.S. announced Sunday that they had struck a slew of agreements on crucial issues, including tariffs, shipping fees, fentanyl control, and export restrictions, following 2 days of talks in Malaysia. This breakthrough is viewed as a critical success, providing significant cooling of tensions. While the ultimate market impact hinges on the subsequent meeting between the leaders, China's Premier Li Qiang is attending 4 major regional summits in Kuala Lumpur today and tomorrow. Capital rotation is clearly moving out of defensive positions and into assets sensitive to growth. Industrial commodities, the bellwethers for global demand, surged on the trade news. Copper advanced significantly, signaling conviction in future economic activity. West Texas Intermediate crude oil prices also built momentum, rising 6.61% last week to close at $61.45 per barrel. This stability is fueled by the improving global demand outlook and ongoing geopolitical supply concerns. Traditional defenses retreated. Gold prices dropped approximately 1% to $4,075 an ounce, extending last week's 3.15% decline to $4,101.70. The decline reflects diminished safe haven demand, compounded by the U.S. dollar's weakness due to the dovish Fed outlook. The U.S. dollar is struggling against oil-linked currencies. The USD/CAD pair is consolidating below the 1.3950 mark. Reflecting simultaneous US dollar weakness due to anticipated rate cuts and Canadian dollar strength due to rising oil prices, Canada's primary export. Friday's session was defined by the relentless momentum in AI-driven technology stocks and sharp volatility in companies facing regulatory and margin pressure. Advanced Micro Devices surged 7.63% to reach an all-time high of $252.92, extending its year-to-date gain to a remarkable 90%. This impressive performance was driven by AMD cementing its position in the AI infrastructure market through strategic partnerships with major industry players like OpenAI and Oracle. Conversely, Tesla dropped 3.40%. The stock remains under pressure following its earnings report, which revealed a 40% year-over-year drop in operating income and significant market share erosion. Compounding the financial woes is the escalating regulatory risk from the NHTSA probe, covering 2.88 million Teslas globally for violations related to the full self-driving system. The earnings season continues to dictate sectoral performance. Today's major release after the market closes is Nucor. As a major U.S. steel producer, Nucor's results will provide timely and critical insight into the health of U.S. infrastructure spending and overall industrial demand. Trading financial instruments, including stocks, commodities, and foreign exchange, carries a high level of risk and may not be suitable for all investors. The information provided in this report is for informational purposes only and does not constitute financial advice. If you found this expert-level market analysis valuable, please like and subscribe to Expert Trader UK for daily insights.